Hey, what's up, guys? Today's trade was on MNQ. We took a long, and it was also on a Topstep eval, which we did pass with this trade, which is why you can't see the contract size on purchase and then the sale because they update the dashboard and you can't see them after it's passed. But this was actually the screenshot I got before they updated the dashboard. Anyway, let's talk about this trade and why we had a long bias in the short term. So as always, we go through this three-step process, right? But I want to acknowledge one thing before New York opens. So I'm going to go to the 1 hour chart and we're going to see how. Okay, so during London, we had very bullish price action, right? During Asia, we had very bearish price action. But what seemed to happen is it looks like we put in a good low in Asia. Why? Because during this uptrend, we created one fair value gap, a bullish one. Price did come to rebalance that one and this one above that was created. And after the rebalancing both, price expanded away from it. So we look for this always on the 5 minute, 1 minute time frame. We're basically looking for price action like this, right? You already know. So if it happens in the 1 hour time frame, it's more significant because those levels or those time frames hold a lot more weight when it comes to the overall direction, right? So that was one thing to be aware of going into New York, was that we had a lot of bullish structure and confirmation. But of course, we still follow our three-step process. We don't have a bullish bias until it's confirmed after this, and then we go long. But we just wanted to know that price was bullish in the short term. So upon opening, we get step one, our liquidity grab. We tag this blue reference, which is the London highs, right? Price didn't expand away from it as I wanted to see it if we're going to trade in the bullish direction. She ended up rejecting. However, I want to keep this 1 hour fair value gap in mind because it became an IFVG, right? Price inversed it. So in theory, if it inverses it and then invalidates it, right? Just like on the 1 minute time frame, if we get a good closure back in the bullish direction, then that is still an entry model on the 1 minute. Now, we're not going to enter on the 1 hour, of course, or the 1 minute using a 1 hour gap. Of course, we still use a 1 minute for value gap. However, this just tells me short term that price can be bullish because think about this for a second. If we got an inversion and then an invalidation, if price is going to be bearish, then during the invalidation, we should have a short term, like a normal bounce, and then continuation of the downside, right? We should see this if it's going to be short-term bearish. Instead, what we got was a reclosure in the bullish direction right here. Let me drag it across right here at 953. So for me, although we were right around London high, we were technically in range, back in overnight range, as you can see. Between these blue references is overnight range of London. Usually I don't like to trade when we're near or inside the range. However, because price reclosed in the bullish direction, I thought, okay, we have a lot of bullish structure overnight, and we're now respecting this 1 hour IFVG for bullish price action. Now we have step one, liquidity grab. Step two, trend established, even though it's small structure. Let me just show you real quick. Even though it's not the best structure I want, this is still bullish. And we have a lot of 1 hour fair value gaps being supported. So I'm willing to take the risk at that point, and I'm looking for an entry model now. So this gap right here was our next entry or our next opportunity. Now I did enter right here instead of entering right here at confirmation. Why did I do that? Because I anticipated the entry. I thought we have a lot of bullish signs. This is a red candle, but price had actually rebalanced and then it looked very explosive to the upside. So I marked it in right there. It did end up closing red and we dealt with drawdown for the anticipated entry, but thankfully we had the short-term direction correct and price worked in our favor, or the trend worked in our favor. Now, why was this a 1.57 instead of our usual 2R, like right here? Simply because this was an evaluation and all we needed to do was pass the account. So 1.57R with the risk we put on would put us just over the $3,000 profit target. And yeah, that's why we did tighten our take profit a little bit earlier. But honestly, the actual take profit for this model should have been right around there, which puts you right below the 1 hour gap fill, which makes it more high probability to get tagged anyway. Now, did it get tagged? Not quite. But if you took that trade, you're still in the green. And at this point, you'd be either break even or TP. You might trail it right here. I would say price is pretty volatile, so I would hold off on trailing. But anyway, guys, I hope that makes sense. And yeah, I just want to let you know the system that we trade, whether it's evaluations or funded, it works very well. It is a little conservative, as you can tell. We take a lot of 2Rs. We only stretch it out when there's super high probability draw levels. But yeah, same 3-step process as always. Liquidity grab, establish trend, and then you seek an entry model. And I hope that makes sense with the 1 hour gaps, fair value gaps. Why does it say H? My bad, guys. But yeah, the overall structure on a 1 hour is definitely more significant than the 1 minute, 5 minute. So we used that today to build structure and bias going into New York. We had our London high grab and then our entry model after the trend was established. You guys have a great day. Peace out.